Hi folks, Doc Severson here for the Theonite Report for Thursday, June 30th. So what is going on in the markets these days? I mean, just since Monday, we've seen about a 100-point rally in the S&Ps from the bottom of the day's price action to today's close, closing at the high. So I've heard a lot of people talking about painting the tape or window dressing coming into the end of the quarter. Perhaps that's something to do with it. But let me tell you, the only reason why we get markets rallying like this is for two reasons. Number one is getting too many people on the wrong side of the tape with too large of a position. Think about all the panic that we had Friday over the weekend into Monday morning, and all of that panic got reversed. The second thing that causes movements like this is certainty. So when you get the combination of everybody being uncertain at one end of the spectrum, and then what's happened over the last couple of days with central banks coming along and saying, hello, we'll save you, number one. Number two, basically people realizing that this British exit is a lot more complicated. It's not going to just happen next week. It's going to take years to unfold, and really nothing has changed this week and next week, and really for the next few months. So again, think about the two dynamics of what you've got down here. Down at the bottom of this move, you've got sheer raw panic as we come into Friday, and everybody was basically on the wrong side of the tape. Then we gap down on Monday because of all the fear, uncertainty, and doubt that was discussed over the weekend. People calling up their brokers on Monday morning or Sunday night saying, get me out of this at any cost. And so we have to deal with that on Monday. But then what comes into the market at that point? So this is the area where people are actually going short. And so these are weak hand shorts, right? These are weak hand people that they don't have any room. There's nothing baked into the position. If they had gone short up here, they had plenty of strength into their hand. But no, they're down here, they're weak hand positions. And so what happens is the central banks meet and they say, yep, we're going to get our fleet of helicopters to come out and spray money everywhere. And then basically as the week goes on, people realize that, okay, this former London mayor is probably not going to be the PM, and everything is probably going to work out okay, and maybe we won't even vote the way that the public wants us to go for this referendum. So what we started off with, panic, is basically some sense of certainty as we get into the end of this week, at least so far here on Thursday. Now keep that in mind, because if you look back in a historical perspective over the last 20 years on the S&P, in this case I've got 20 years of chart up here, you can see situations like this that we had with long-term capital management back in 1998. The whole world was falling apart, and next thing you know, we end up much higher from there. Okay, we've seen things like back here where we had the Hezbollah war, and everything came out just fine from that in 2006 from here. We had issues like the first potential Greek exit where Europe was melting, and we weren't sure if the European Union was just going to completely fracture apart. And what happened after that? Higher prices. And then, of course, we had this whole issue that we had at the end of 2012, which was the whole, hey, let's talk about the sequester and the fiscal cliff and everything. And again, once more, everything gets magnified and blown up out of proportion and creates this equally toxic soup. Really, it's the same thing here where all the panic gets unwound to the upside through certainty. And if you add a couple of helicopter drops of cash we had back here in 2013, 2014, this is where we get markets up here. So right now, I would say the pain is still to the upside. The pain is still to the upside. What we see on the weekly chart here is that, yes, we went from a higher high to a lower low, but at this point right now, in the context of this weekly chart, this looks like a regular size swing, and this only came down to about the 38.2 retracement of this entire move, which is a very normal thing to see. So it's not surprising right now that we're not seeing the same thing right here as back in August of 2015. We're not seeing another repeat of January of 2016. So far, what is cooking right now is potentially a slingshot move that's going to push the price up and above recent highs. Can you believe it? Well, I know that's not a popular opinion. There's a lot of people that are out there that feel that the price should not be up at these levels and has no right to be up at these levels. And boy, wait till everybody wakes up on Friday morning and we get into the new quarter. We're going to punish this thing and send it right back down again. Well, that may be the case. I mean, we still haven't hit a new high up here, but you can just see how the price is acting right now, that this is not the same type of move that we saw with no sense of certainty back in August of 2014 or 2015 that we had with this move here. There was no sense of certainty for literally a month and a half as we got into January of this year. So yes, I agree with everybody that says that we're kicking the can down the road and we're going to pay for it someday. But again, there's a huge difference between what should happen and what is happening right now. And right now the price rules everything. We have not yet gone into a full-on downtrend. And this, to me, is still a weekly chart in an uptrend. Until that changes, until that weekly chart prints a lower high, we're still going to be heading higher. The pain is still going to be to the upside. Next in tonight's video, I want to look at the underlying stock of GE, or General Electric, the old industrial. So one of the things that I will do personally, and this is the way that I trade because I do use charts to be able to set up trades to improve my probabilities, is that I want to be trading with the trend on as many of these large time frames as possible. So you can just see here on the monthly chart, we have an uptrend here, higher highs and higher lows setting up. And then we have on the weekly chart, within that monthly trend, we have a weekly uptrend as well too. At no point in here are we making lower highs and lower lows. So the momentum is moving to the upside. It's almost like jumping in a river and swimming downstream if this is what we're trying to do. We don't want to be paddling upstream by shorting into these types of moves. So in this case, what we do is we set up a vertical debit spread, what we call an in-out spread, and it's one of the simplest trades that I've ever seen in terms of just how benign it is to manage this option trade and the high probability of success for this trade. So here's an analyzer risk graph, and you can kind of see the P&L graph of this. The green line is at expiration. The white line represents approximately where it is today. Now we set up these trades about at the money, and then all we ask for is that the price move generally in the direction of our forecast, in this case to the upside. And what I love about these trades is how easy they are to manage. What's really important is if you look at issues like this, the vega, or the sensitivity to implied volatility, very, very low for this trade. Also, the time value decay for a debit spread trade, essentially zero. So we can hold this trade all the way into expiration week. So we have plenty of time for the stock to make its move. In fact, this week, it actually went well down before recovering back up to the upside, as long as within the space of the time that I hold it, which is usually just over a month, as long as it gets near this target, I'm looking at least a 50% return on capital. So this was a trade that we shared with the trading community at TheoTrade. And also what we're looking at for tomorrow is perhaps one on Chevron. So we still have to make up our final determination on what we're looking for on Chevron. But so far, this is meeting all the criteria with a nice change in polarity to the upside here on the monthly chart, nice trend to the upside on the weekly chart. And the daily chart looks like it's in a nice little flag consolidation here, building up a lot of potential energy. So I'm expecting to see this one at least move up to this area here before finding resistance, and that should be more than enough for us to be able to grab our fair share. Again, details in the chat room in TheoTrade. Thanks for listening to tonight's report. You guys have a great weekend and a great 4th of July holiday, and we'll see you back here on Tuesday. Thanks for listening.